Welcome to the Shepherd's Wallet podcast, financial guidance that speaks pastor. I'm Seth Scott, and I help ministry leaders navigate the unique financial complexities that come with answering God's call. Pastors face one of the most complex financial situations of any profession, yet there's a shocking lack of targeted, useful information available to help them. That's what we're here to change. If you've ever felt overwhelmed by housing allowances, confused by SECA taxes, or frustrated that generic financial advice doesn't address your unique ministry situation, you're in exactly the right place. In today's episode, we're talking about a practice that some pastors engage in to save taxes. The problem? It doesn't work, and it sets up a huge audit red flag. We'll then go on to discuss legal and legitimate ways that pastors can reduce their taxes, many of which are available only to ministers. Let's dive in. So chances are, if you're a pastor, you know another pastor that's engaging in this practice, or maybe you are yourself. And here's the situation. So you, as a minister, take wages from your church, right? Say you make $50,000. So the church pays you $50,000. You pay taxes on that $50,000. You pay income tax on the portion that's not your housing allowance. If you haven't opted out, you pay self-employment tax on the full $50,000. And then you probably are tithing back to your church. You know, if you're tithing, let's say $5,000, you then write a check for $5,000. It goes back to the church. And that's kind of the situation. So the idea is, well, what if the church just keeps that money? You know, instead of taking the full 50,000 and then writing a check for 5,000, why don't you just accept 45,000 and then let the church keep the 5,000? That way, you're not paying taxes on the full 50,000, you're only paying it on the 45,000, and the church nets the same money as if you had written them a check. It seems like a good idea. And again, I personally know pastors that have this arrangement. The problem is that it doesn't work. It's not legitimate, and you're asking for an audit. I'm going to get into the particulars and the language and why this isn't a good idea. But even more than that, I want to talk about better strategies that actually do reduce your taxes as a minister. And that's really what excites me. There's so much that's available to pastors in particular to save on taxes and to build towards a low tax or a tax-free retirement that it's legitimately exciting. I'm a little jealous, honestly, trying not to break the 10th commandment here, not being a pastor myself, and I can't take advantage of these. So let's focus on the good things that we can do, but I do want to address this one issue because, again, I do see pastors that do this and they don't know that they may be setting themselves up for a tax disaster. So the main idea of why this is not a good idea is this doctrine called constructive receipt. And this is a doctrine that's codified in tax law since forever. And the simple explanation is that if money is made available to you, then the IRS considers it taxable money. So if, as an analogy, if your employer offers you a $100 bill and say, good job, you deserve and you've earned this $100 bill, you can't refuse to take it and then turn around to the IRS and say, I never had $100. Well, according to the IRS, the minute that it was offered to you, that money is effectively yours because you could have chosen to take it, and so therefore it's considered taxable. That's the main idea here. And so in the situation like we talked about before, where the church board approves a $50,000 salary for their pastor, and their pastor says, just keep 5,000 of that as my tithe, I'll take the 45,000, thank you very much. You can do that, but the IRS considers that extra 5,000 to be taxable income whether you take it or not. So not only are you not getting the tax benefits for not taking that money, which is really the whole reason why you would do something like this, you may be shooting yourself in the foot as well because you didn't actually give that money back to the church. I'm pretty sure you can't add that to your Schedule A as a charitable deduction and get a potential tax benefit from doing that either. So you're not getting a tax benefit either way. So it's really just not a good idea. The actual quote from Treasury regulations, I'm looking at section 1.450-2. It reads, quote, Income, although not actually reduced to a taxpayer's possession, is constructively received by him in the taxable year during which it is credited to his account, set apart for him, or otherwise made available so that he may draw upon it at any time. End quote. So, again, the situation, the minute that the board approves a salary of $50,000 to Pastor A, the IRS considers that $50,000 to be constructively received by the pastor. And so whether the pastor refuses to take part of it or not is really immaterial to the case. If you would like a source that is more specific to pastors, Church Law and Tax by Richard Hammer is, as far as I'm concerned, the gold standard when it comes to anything having to do with legal regulations or tax regulations for churches and pastors. And a quote from that: under the constructive receipt doctrine of tax law, this arrangement, talking specifically about the salary reduction arrangement instead of tithing, does not reduce taxable income by the amount of the salary that is refused. So that's enough about that. It's not a good idea. If you're engaging in this process, just stop it. I'm sorry to say it's not good for you. If you're a nerd like me and you like doing deep dive research on this stuff, you may come across a court case that may seem on its surface to maybe have something there as far as actually making this work for you. It's called the Giannini case or the Giannini exception. It's a court case from 1942, but it's super narrow and it almost certainly does not apply to your situation. So, just a quick overview of that case. This had to do with a bank president who refused future salary before earning it, and it went to the courts, and the courts actually did come down on the bank president's favor in saying we're not going to count this as taxable income. But it was a very particular case, and the sticking point here is that the reason they allowed him to do that is one of the reasons was because he ended up having zero control over what happened to the money that was withheld for him. Now, it's going to be really hard for you as the pastor of a church to make the case to the IRS that you had absolutely no influence over church decisions or over what the church does with that money. So the IRS just isn't going to buy it that you had, quote, no control over that compensation that the church withheld for you. So it's very shaky ground if you try to use this as an example. It just doesn't apply to a pastor's case. So, just a quick warning of what this could bring about. You're inviting an audit, first of all. It's everybody's worst nightmare. You're facing potential penalties, interest, professional fees to manage the audit. You'll, of course, have to pay the back taxes that you would have paid anyway. This also could affect your reported income for things like loans, disability, retirement contribution levels. Any money that you don't report on your taxes that you received. There are a lot of other benefits like earned income tax credit and other things like that that are based on your wage that will get reduced or even removed if you don't have the earned income to substantiate it. So it's just not worth the risk for the savings that you're getting. Okay, so let's talk about the good news, all right? Let's talk about legitimate strategies that pastors can use to actually reduce their taxes. I got a number of them here. The first one, everybody loves it, everybody's favorite, the housing allowance, right? Everybody knows about the housing allowance. The problem is that most pastors aren't optimizing it to its full potential. You may be leaving hundreds or thousands of dollars in tax benefit every year on the table because your housing allowance is not properly optimized. So that means knowing exactly what housing expenses can count towards substantiating your housing allowance, actually having a system for calculating fair rental value for your home, everything like that, actually having a system where you can easily track your housing expenses. Um, if you want a fun little research project, go back to my very first podcast episode. It's called the Sharpie Strategy. And I talk about an easy set it and forget it system for tracking your housing allowance expenses so that come tax time, when you have to substantiate your housing allowance with those expenses, it takes you 5 minutes. It's really amazing. And I think it's worth the listen. So again, get that housing allowance really optimized, and let's get you every legitimate dollar in tax benefits that you can get from that. The second strategy, and I would argue this is even better than the housing allowance, this is an actual salary reduction strategy that does work, and it's using your church's 403B retirement plan. This is the golden ticket for pastors, as far as I'm concerned. You get a quadruple tax benefit. Unlike the housing allowance, you actually get to reduce your self employment taxes using this strategy. So the quadruple benefit you get is, yes, you get an income tax deduction for money you put into your church 403B. You also get a self-employment tax deduction, not like your housing allowance. Again, the money grows tax deferred. So that's the third benefit. And then the fourth benefit is, because you're a minister, you can take withdrawals in retirement from your 403B as a housing allowance, which come to you tax free, because of course you're not paying self employment tax in retirement. So this creates basically what I call a super Roth. Um, the idea with a Roth account is that you put money in, you pay the taxes now, and then that earns you tax-free income for the rest of your life, and it also passes tax-free to your beneficiaries. This is even better because you never have to pay the taxes on it if you do it right. You put it into the 403B, you don't pay income taxes, you don't pay self-employment taxes, it grows tax-free, and then you take it out tax-free as a housing allowance. No one else has this ability as far as I'm concerned. So this is absolutely a minister's superpower. And if you're not taking advantage of your church's 403B, then you should be. And if your church doesn't have a 403B, they absolutely should. It's a travesty if they do not. And I want to talk to them if they don't have one. I go into deep dive on this in my book, Shepherding Your Finances. You can go to shepherdswallet.com/book if you want to pre-order it at a discount. All right, the third strategy is something in retirement that you can do after you turn 70 and a half. And this is something everybody can do, by the way. If you're not teaching your congregation about this trick, your church may be leaving money on the table that is going to the government that could be going straight to the church. And it's something called a qualified charitable distribution. And again, anybody who has an IRA, an individual retirement arrangement account, and they're 70 and a half or older, they can essentially write a check to the church directly from their IRA. And that legally and legitimately completely bypasses their taxes. It's a way to just remove the taxes from that contribution altogether and just give it directly to the church. So it's the same kind of situation that we were talking about, except this is the legal way to do it. Instead of taking it out of their IRA, paying taxes on it, and then writing a check to the church, they can take it directly from the IRA, give it directly to the church, and then nobody pays the taxes on it. It's amazing. If you're 70 and a half and you have an IRA, you can do this as a pastor. Your congregation can do this. So if you have elderly people who have IRAs in your church, and they're just writing checks, let them know that they can save in taxes and they can give more to the church, right? If they give directly from their IRA. So that's something that you can definitely talk about. And the fourth strategy is something called an accountable reimbursement plan. Every church should have one of these in place. This is a way that you can receive reimbursements for ministry expenses that your church wants to reimburse tax free, right? If you don't have an accountable reimbursement plan and your church has some sort of other way of reimbursing you that doesn't involve this, then that may be considered taxable income, and it probably is, which means you have to pay taxes on it. And that's not good. However, if you have an accountable reimbursement plan, then that just takes care of the issue. You give your receipts to the church, they give you the money back. That is a way to essentially get a deduction for your expenses, even as a W-2 employee for the church. So it's called an accountable reimbursement plan. All right. So to kind of sum up, yes, the salary reduction scheme to tithe doesn't work. The IRS doesn't like that. You're asking for an audit. But look at all these other legitimate opportunities. And again, most of these are only available to pastors. If you haven't worked with someone like myself, but maybe with a financial planner or a tax professional who specializes in clergy and who understands all of these ins and outs, you may be leaving thousands of dollars of money on the table every year by not optimizing your situation and really looking at all of these opportunities that are available to you. So all these things we talked about, all completely legitimate, IRS approved. So, here are your action steps that I want you to take after hearing this. And the first two are completely free. The first, you should download my free housing allowance tool. We talked about the housing allowance as one of the legitimate tax savings opportunities that you have. And again, most pastors aren't actually optimizing it. So, this tool, it's a complete optimization system. Not only does it help you track and record and document your housing expenses, it also walks you through a way of researching and documenting your fair rental value. It also has language that you can present to your board. It has a ready made request letter that you can just print out and give to the board. It even has board resolution language that you can also print out and give to your board if they just want to sign it and just move on. You should be updating your housing allowance every year. Right now, it's the end of October. This is about the perfect time to start looking ahead towards 2026 and really dialing in your request for your housing allowance for next year. For that last board meeting of the year, you want to get in and do something like that. So this is the perfect time. You're going to go to shepherdswallet.com/housing allowance tool with a dash in between each word. So housing dash allowance dash tool. I'll put a link in the description of this episode so you can just click on it. But if you want to type it in, that's how you do it. The second thing that you want you to do is, again, free. Subscribe to this podcast. All right, subscribe to this channel, please. I put out weekly content, and one of my favorite things to talk about are tax saving strategies like this for pastors. So if you're a DIY kind of person, if you like doing things yourself, and you can't really beat free, and you like being educated on all of the crazy wonky things that are off the wall about your tax situation as a pastor, this is the place for you. Subscribe for weekly content, absolutely free. And the third thing, this is a new service that I just launched a couple weeks ago, a pastor tax review. I want you to go to shepherdswallet.com/tax review. No dash this time. I know I should be consistent, but hey, what are you going to do? So shepherdswallet.com/tax review, one word. And this will take you to a place where for $95 after discount, I'll take a look at your most recent tax return. What am I going to do with it? Well, first of all, I'm going to look for errors because most pastors either file themselves or they hire a CPA for $500+ to do it for them. But here's kind of a dirty little secret. Even CPAs, a lot of them don't know about minister taxes. As a tax professional myself, I know that clergy taxes are completely backwards. They are legitimately niche. And a lot of CPAs, maybe they see one or two ministers, every year. And if they don't know what they don't know, they could be messing up your taxes. And I've seen it with professionally put together returns. I've seen big errors. And so just a second opinion. I'll look for errors. I'm also going to look for long range optimization opportunities for you, right? I'm going to put on my financial planner hat, and we're going to look and see, hey, are you saving for retirement? Are you taking advantage of your savings opportunity with your 403b? Is your church doing your payroll correctly? That's another big thing that I see a lot. Churches can mess up W-2s for pastors, and it happens all the time. So you could be a whiz at doing your own taxes, but if you don't know the mistakes to look for in your church's W-2, that could be a problem as well. Anyway, I'm not going to sell it anymore. If you would like peace of mind about your taxes, go to shepherdswallet.com/tax review. And for $95, I'll take a look at your tax return, give you a 5 to 10 minute video kind of breaking down everything that I've found, and then I'll give you a report with what I've found with some next steps that you can do to take that next step towards optimizing your financial situation. So to sum up, the IRS has really given ministers incredible tax benefits. I mean, the housing allowance, of course, but there's ways that you can leverage your dual tax status. You have an amazing opportunity with retirement. It's probably easier for pastors to build a tax-free retirement than for any other profession. We don't need questionable schemes like what we were talking about before with the tithing thing, when we do have legitimate strategies that can save you even more. So use what works, avoid what doesn't, and then you can sleep well, knowing that you're honoring the IRS and you're honoring God. You know, like I talk about in the book, your money that comes to you from your church is not common capital, it's sacred capital. It's literally the stewarded generosity of the people of God given in obedience and surrender to the Lord, and then given in stewardship to you as the pastor. So there's something holy, there's something reverent about the money that's in your hands as a pastor. Your integrity in how you handle that is worth more than any tax saving scheme. And the good news is you don't need the schemes. You don't have to choose between the two. The legitimate strategies actually end up saving you more anyway. Thank you for joining me on the Shepherd's Wallet podcast. I hope these strategies help you steward your sacred capital with greater confidence and peace. If you found this helpful and would like to go deeper in your stewardship journey, join the Shepherd's Wallet community at shepherdswallet.com/join. You'll get weekly live Q&A sessions, pastor-specific financial tools, and a community of fellow ministry leaders committed to faithful stewardship together. Also, you can pre-order my upcoming book, Shepherding Your Finances. It's the comprehensive guide to everything we talk about on this show, plus implementation worksheets and strategies you won't find anywhere else. Pre-orders are 35% off for a limited time at shepherdingyourfinances.com. Thanks for listening, and remember, you are worthy of double honor, including the honor of proper financial guidance. See you next week.